Hi guys, this is Simon with ToughTrader.com. It looks like I am not sharing my screen, so let me see if I can get that going here real quick. There we go. It's now sharing, present to everyone. We're doing that. So doing a trade review for November 27th, right? So every day when I come in, what I want to do is advance my trading DNA. How do I do that? I want to have a trade plan when I come in on the day. I want to know whether I'm looking primarily long or primarily short, right? And I want to know whether I'm scalping or going for a swing trade. My primary objective is to find the major turning point of the day. And so when I come in on the day, right, the first thing I wrote is I said, normally I placed a white zone here later, but I said low volume day. This is referring to, for ES for today, right? So when we came in, this is what we were looking at. What I wrote in the notes was this is a low volume day, not enough data here to place a zone. And really, I had no idea of where to place a zone because we were coming off of no idea. I didn't want to place a zone in any one particular place where I could just say, this is where I'm going to lay down the law, right? And this is where I'm willing to take risk pretty close to blindly as we're coming down on the market. And the reason why is because if you look at the profile, which I'm going to pull over here real quick, let me mark the time so I keep this relatively brief, right? So when I look at the profile, and that's my Bitcoin chart, let's get rid of that. And let's come over to ES really quick. And let's collapse everything down. There we go. So coming in on the day, all the way over here. Let's drag this over. I was doing a coaching session earlier. Okay, so when I'm coming in on the day, right, this was Friday's action. It was a half day. There's not a lot of volume. So immediately I know that I don't want to trust the information that's in here, right? Look how the day unfolds. So the next thing I want to look at is things that are more general in practice, right? So I know from where the value, these blue areas are where the value areas were for each of these days. This is Tuesday, the day we had the significant rally to the upside. It was a P-shaped profile. We had a balanced day the following day, right? These are all just regular trading hours, meaning from New York open to New York close, essentially, right? This was Tuesday. This was Wednesday. This shows up the 23rd as a regular day, but really it wasn't there. It was a Globex session. The market was closed, right? Meaning the S&P had nothing to trade against. There was no cash market to trade against. This was just random people coming in, deciding they wanted to mess around on a 3-point random day. I consider this information void. So what I know from this is that I had a value area from here to about right here, right? And I knew two things. First of all, in order to be truly bearish, you know what? You cannot see what I'm pointing at because this is not pointing over. Here we go. So let's start that again. This was the day coming in. This was Friday. This was, Thursday. There pretty much was no information to be gleaned from Thursday. The reason for that was the market was closed. This was trading a Globex session, but there was no cash market to trade against in the S&Ps, right? So this was Friday. It was a half day. There wasn't much volume there. I didn't trust the information here. So what I'm leaning against is this location and this location. Why? The most recent data is the most important data, but, and this is important, okay? This is the area. These are the buyers. If you were buyers in this location, right? My DNA says that buyers defend, sellers protect on the way up, right? So if we're trading above these buyers, my idea is generally that the way they're going to behave, human nature is they're going to defend on the way down, right? Therefore, I put a box around this. I know when I get into this area, right, that I expect a defense. So now, knowing that, my goal was to get a long generally or look for a long in this area. Now, I want to say something else. In the room today, my idea and my primary thought process was A, we would have chop. B, I wanted to see how the market reacted when we came back to get a full day, right? A full day of data in so I could see how the market was behaving. Now, I liken this to someone who goes into a casino that watches whether a table's hot or cold. I want to know, are we in chop? Are we expanding in range or contracting in range prior to back to where we were last Tuesday and Wednesday, right? Or are we contracting, right? Is it more of a choppy market? I want to know this because I have a pretty clear idea of where I want to lay risk on. But in order to make that risk work, I have to learn how the market is behaving. So in ES, this was I was looking for reversals in this area plus 10-point rotations. So look how the market behaved here, right? If we split this out, To open up, this was the A period. These are all in half-hour blocks, and this is a profile chart, right? Again, I'm not paying any attention to this other than we're trading above prior day's high and above prior day's low, and we, right out of the gate, we have failed to test into this location. So what does the market do? If you look at this A period, right, this A period opened pretty strong. We opened up and pretty much drove straight out and above prior day's high. And you can see this one little F period? That's an indication of a poor high. We also had a poor low on the bottom end. Again, it was a half day Friday, not a lot of really good information to work off of, right? This was my thought coming into the day. If you looked at the advanced decliners, and particularly the advancers, when we opened strong on the advancers, and I'm going to pull this up for you right now, right? This is what gives me context to the day, right? And so I'm going to show you a really clear distinction here. This is my advancers. That's all I'm looking at. I'm going to go back to Tuesday. See on Tuesday when we gapped up and we had this P-shaped profile, see the advancers are pushing out of the gate almost a 2,000 print. In the first 15 minutes of the day, this first bar is pushing straight to the upside, right? So if you compare that, right, so we gapped up, we were above prior day's high, we had a very strong reading, and if you look at the tick out of the gate, it was also very strong. So I'm going to compare that to this morning, right? So if we come in and look at this morning, we did gap up, but we didn't gap out of Friday's range to begin with, right? And Friday's range was weak. Next, if I look at the advancers versus decliners, we opened and we closed sub 1,500 advancers in the first 15 minutes. My first response, the first thing that tells me is the market's probably going to push back in, right? It's my first thought process. Now, again, I was in a watch mode today, so my objective here is to take this data and carry it forward. I wanted to give the market one day. We also have other context information, contextual information we can put into the market. Number one, Mondays and Fridays tend to be the narrowest range days of the week. That's on a statistical basis, right? It doesn't mean that you can't have an outlier where you have a Monday that really pushes. You most certainly can. What it means is that I'm simply not looking for that. I would have to have evidence that that was going to change, right? Next, when I have tick, right? If you look at the tick in the morning, normally I expect tick to either hit plus 600 or minus 600. I don't have these quite right. Here's minus 600. In a healthy market, we are swinging to both sides. In a strong market, all the ticks, right, are staying over the positive territory, right? So look through the first hour of the day. Here's the zero line right here. Look, the tick here, I'll just draw a line so you can see this clearly on the zero line. Here's zero, approximately, right? And I'm going to spread that out so you can see it quite clearly. And I'm going to compare and contrast this for you so you're really clear on the difference. On the day we gap up and drive, look on days when we gap up and drive. 21st, we gap up, significant gap above prior day's high. Tick is a healthy 1,000 on the first bar. Even the second and third bars in the 15 minutes, we are pushing above 600. Compare that to today, right? So if we come back over to today, we open up. Tick is struggling around the zero line. First clue. Second clue, we opened up in range and drove outside of prior day's high. Here's prior day's high right here. What I'm looking at here is if we close back in, my thought process is we're going to trade to the other end of the range. Well, Friday's range was pretty narrow, but that's exactly what we did. We pushed down and we traveled to the other end of the range. What I found interesting here was when we set a new low and we broke the range, you would think, and I missed this in real time, so this goes down to my notes on things to improve for the following trading day, right? So, and that's important, right? Remember, the goal is to start off. There was no damage for me one way or the other. It wasn't a great day. It wasn't a bad day. I had my objective was to learn how the cards were being dealt in the market and go and make my mental adjustments for the rest of the week coming off of a 3 or 4 day rest period, right? I know a lot of people feel compelled to trade every single day. You've got to have a winning trade. You've got to push to a new high. And the market just doesn't work that way. If you've been a long-term trader, the goal for me is not to have down days or to be able to sidestep as many of my down days as I can and, right, recognize what my good days are going to look like, right? And occasionally that means I'm going to take a pause and just go, I'm having a learning day. I'm going to think through the day with the same intensity. I'm going to make my notes. but I'm really preparing for the rest of the week and learning what process or what my competitors are attempting to do. So I would have normally looked at this and said there's going to be an A stage. This would be the A stage of a breakdown, right? We consolidated above prior day's high. We finally came back in. We trapped this group of traders right here. Whoever was getting long here, right, was clearly looking at the market. If you're buying up here, you're thinking like, hey, we're going to have trend day up. We're above Friday's high. The market's going to the moon. These guys, as soon as we close back into the range, what's going to be, you got to think, what's your competitor doing? Your competitor's kind of going, uh-oh, I kind of stuck it to myself. And had he been a smart competitor, he would have looked and said, hey, look, the advanced decline line hasn't even reached 1,500. I know the advancers on strong days hold above 1,500, right? Doesn't have to be that way, but if you look on days when we push up, even through the past week, right, where are declines generally, where do they get met with responsive buying for pushes back up? You'll see the advancers stay plus 1,500 all the way through here, right? Again, advancers over 1,500. When you look over here and we're pushing up, right, we open low, right, but then advancers, as we start to push up through the day, get above and hold above 1,500. So I have a pretty easy clue there that if we're going to push higher, I want the advancing issues to be above 1,500 advancing issues in order to make push to the upside. Also, look at the tick on days when we're making advances to the upside. The tick does not have a very difficult time staying positive all morning long. This is a market that's going to push, right? Look over here because you're trying to balance your thought process, right, in real time. So when you look at this, let me pull this down to where we were today. 1 second. Here, this is the easiest way to fix it. And get over here. So when I look at this in the morning, right, I'm going to go, tick's barely above zero for the first hour. That's not a sign of a trending market. I can put that into a checklist. Again, the DNA of your trading. What does the market look like? What doesn't it look like? Number two, advancers can't get over 1,500. That's not a sign of a market that's going to continue to push. Now, when we roll to the downside here, right, notice that when we push to a new low, tick does not set a new low. I want to show that here. This is actually the low price right here. And you'll notice we actually end up with a green candle, a positive bar on the tick when we hit the low. That was the first sign of reversal for the day, right, was that we were actually going to push back above. Now, this is a 15-minute chart, right? The other part that was important that you can't see here, but when you come back to the value area was, why did we get a reversal here? We want to ask, when you're looking backwards at the market, you want to go, well, why did I get a reversal there? What don't I understand? What didn't I see that was so magical here that we just came to a dead stop? Well, you had a couple of things. First of all, tick could not get any worse as we came in and set a new low. If you look on a smaller time chart, that actually ended up being tick divergence at the low, right? Here I can show that to you. If you push it down to a 5-minute chart, what you will see is as we push the low here, right? As we push the low, you can see that we hit a new low price. We did not hit a new low tick, and tick actually improved overall within those 5-minute bars as we were pushing the low. That was sign number one. Sign number two, this is my last seller. Once I get above my last seller on a 5-minute bar, right, all these guys, just like these guys were stuck out over here, now in a balanced market, right, this occurs all right in here, right here. Now, these guys who sold, once we get over here, think about it. If you saw, oh my gosh, the market's going down, this is the day we're going to correct. Let me take profits out of the stock market. Or if I'm a short-term trader and I'm out of place or I'm just overly aggressive, let me short here for a push to the downside, right? Again, on ES is not a momentum market intraday. It's more of a balancing market most of the time. Bad idea to short near the low, right? So next, where does the market come back to, right? Realize that it's following a function here. So we had everyone trapped above. We swept through Friday's range. And if you'll look, we trapped late sellers here. This bar is what told us we got above. And if you will look, this is a very normal function. We came back to the 50-60 retrace, right? This is all part of a DNA, a process where you know you got above your last seller. You get a 50-60 back. Now notice, this was going to be a difficult trade because you were going to push right into the 50-60 right on top of you. Now, this trade right now, because of the lack of rotation and lack of stretch, If I wasn't able to get long down here, there's no trade here for me because I know I'm going to run into a brick wall right at the 50-60, and I want to try to get better than one-to-one risk reward. So I'm probably skipping this trade. Under most circumstances, I'm looking at this, and I don't really want to take this trade because I don't think we're going to push back up. There's no one. There's a small. This is an intraday imbalance where we got too many shorts at the low, and they squeezed them out. It was not a significant change in character, right? Additionally, what you will notice is on the advanced decliners, yes, we pushed down, but notice the advanced decline line never pushed below 1,000. So that brings up a natural question that I would have if I'm doing my research and trying to learn, right? Number one, I know that what has happened here is I've pushed into, right, back into Tuesday's value area where there's people who initiated positions in that area, and I know that it's human nature, therefore, to defend your position when it comes in, that we are not bearish unless we can make a significant impulse move below this value area, right, and hold below this value area, that buyers are going to come in and defend. So what's the last piece that I would be looking at? The next piece that I would be looking at, I'll show you right here. The next piece that I'm looking at is I'm going to go back and go, well, what does a down day look like here? So I'm going to set this back to a 15-minute bar. Oh, we've already done that. There we go. And I'm going to trail back over here. Okay. Here's a day where we opened up, we gapped down, and we actually got a significant rotation to the downside. Notice that when my advancers reached 1,000, right? So here's the 1,000. Notice that once we get right to this point, about 1178, advancers get back below 1,000, and they get back below 1,000, actually back below right here, right? So this is the point, right, where advancers are declining. Notice that we push right here to a new high, and the advanced decliners really aren't, the advancers are really not taking off. Additionally, if you'll look at tick, right, a lot of times tick will push up to positive 600 on a down day, and we can't make any inroads back to close the gap. And, right, there's one other piece here. That other piece is we're making first push, second push, 3 pushes, right? I would expect when we get this third push that we're going to go ahead and close this gap, right? So if I look here and I go, okay, we have pushed out. We have clearly closed above. Once we close back in, I've gotten above my last set of buyers. Everyone who bought here who was thinking we're going to push to the close, and I'm looking at my advanced decliners, and we start pushing down and the advancers start to roll down as the market starts to roll down, I'm going to go, uh-oh, we're going to push lower in this area. And what am I looking for again? As I'm pushing down, I am looking to set a new low price and not get a new low tick. And look where that happens. And I want it to be obvious, right? So as I'm clicking through here, right, I'm getting new lows and new low price and advancing in advancers as the market's moving down. And I'm getting a new low tick as well, right? See here, pushing down, I get a new low price. I get a new low tick. As we're pushing lower, we're starting to get a little bit of divergence. But look where this becomes obvious. Here's where we get the biggest push down. Here's the next push down. One more. And now look, as we're pushing lower here, the tick, neither the wick nor the body can get a new low. What's the rotation size? We've gone from 25.83 at the high all the way down to almost 25.63, 20 points of rotation in ES. That's what it looks like when it's extended down. And if you'll look, we were also underneath in this particular case. As opposed to being above prior day's value area, we are below the prior session's value area, which got built all up here on top the prior session, okay? So that's how, when I come in and look at the market, right, and I'm trying to gauge, hey, do I want to be bearish or do I want to be bullish? The first thing I'm going to look at in the morning is I'm going to say, hey, as I come in here, even if I don't short, I'm going to look at this and go, this market's probably not running away from me, right? 0 ticks, sub 1,500 on the advancers. I probably think this market's going to come in. But by the same token, when we get to the lows, we're not really pushing below 1,000. And I know when the market really pushes down hard, we get down into the 600s, the 800s, when we're really pushing to the downside. That doesn't happen either. I get above I stay here for 20 minutes. I'm getting tick divergence at the lows where we're trying to push to new lows, but we can't push new lows on the tick. Trap late sellers are getting overzealous, and we push right back to the mid. This 50-60 retrace is not valid for me because there's not enough risk reward in the trade for me to get back to the mid. I would really have to think we're going to have room to swing to the other side. I want more room in the mid to get that done. It just didn't happen. One other piece that I want to show off in here is I want to go through and look at NQ real quick. Along with having ES with an inability to hold above Friday's high, we clearly closed back in, and that generated all the selling. We get the reverse response when we get below. They try to push below, They can't make any progress to the downside to come in and fill this gap. Look at NQ, follows much the same pattern. Here's NQ. So here's our push above to Friday's high. NQ looks all right now. It's gap down. It's exceeded the gap fill. Anyone who faded the gap fill clearly got stopped. We run right to Globex high, right? Now, this is looking pretty good at this point. If you're an NQ bull, you're kind of going, hey, we're looking all right. I'm comfortable being long. This is where you have to go look at what ES is doing, and you have to go look at the advanced decliners and realize there's simply no juice on the upside. Also, this is an exhaustive bar. If you look on this push to the upside, you want to see follow through, and you can see how they try to defend this bar right here. This bar was clearly after consolidation and a break, and you can see all the way through here they're trying to defend this bar. Now look where it's over. It's just one bar that changes character. We get underneath, right? We close right back into Friday's high. Everyone up here, this group of traders has gotten overzealous. They're trapped, and they're going to turn. And if you look, we're going to run. We didn't quite make it to the bottom end of the range. NQ's been stronger. And what do we get? We roll from 64.24 all the way to 63.95. That's 30 points of rotation. We're under Globex low. Now, had we consolidated underneath Globex low and had the inability to close back in, you'd have been fine. This is your first close after Globex low. I call that an A-grade trap. This is your second trap below Globex low, an inability to get back to the low of the day. What do? We come right back to the mid. Here's your swing high. Here's your swing low. This gets you above your last seller. If you look, here's your 50-60 back. And this was actually a decent trade from your 50 for a run to your 62. It actually gave you 10 points. Still pretty tight. You just had to recognize there was no sell pressure on this thing. We balanced sideways. And if you look after hours here, we've traded all the way back down to 64.01, 64.01.75, right back down to Globex low. It's just a balanced chop market, right? What's the point of all this? How do you take this all into context? This is how you take this all into context when you start the day. Number one, and I'm going to wrap it up so that everyone knows exactly why it's important. Before we started the day, this is the information that we had right here. There we go. Off my other computer. Let me adjust the screen. There we go. This was today. This was Friday. This was last Tuesday. The first thing I know is I'm above last Tuesday's rally right over here. So I know in order to be short, right, I can write this on my trading journal or in my trade plan before I start the day. For the market to really fall apart, I'm going to have to get below these buyers that hung out here Tuesday and Wednesday, right? Number one. Clearly, that was going to require a significant stretch. And unless we opened up and drove straight through here in the first hour, that was unlikely to happen. Number one, right? Number two, this didn't count for much, right? I really didn't want to lean on anything inside of this day because it was a half day. I can skip it, right? Next, as I pushed into this area, right, I go, okay, I know these guys are going to defend. I'm looking for excuses to get long. I certainly don't want to be short against this location, right? Number three, when we opened up and we pushed out in the A period, right, what were my clues of how things were going to go? Number one, this is my balance area. This is my close outside of balance area. We swept. That wasn't a surprise. But once we closed down into here, what I didn't want to see is a close back above this support level, right? Because that would have meant there was responsive buyers. This F period on a half hour told me that there's responsive buyers. We make a 50-60 back. See, I don't even have to look at the dome to know what the market's doing. Here we close back in. Here's my 50-60 retrace in G period, right? And then what's the market's intention to do? Well, if you look from period A to the bottom of period E, we come right back to the 50-60 retrace, and that's where we exhausted for the day. when you understand that that's going to be the mechanics of the market and what the market's going to look like, on open drive higher days, we tend to not close back into the prior day's high after we clear. First clue that we weren't going to have a drive open. Number two, even though ES traded below Friday's low, NQ never traded below Friday's low. So both markets weren't falling apart. We just simply were able to run through the majority of the value area from Friday's range, right? So that told me to look for reversals, not to get bearish at the low, right? And the last piece it told me today was there was no energy on the upside. When the advancers and the volume and the tick aren't there supporting a ravenous drive to the upside, right? Just know that any push up is very likely to get met with the response of buyers. And if we're trading above prior day's high and we close back in, know that we're probably going to trade back to the mid of that range or to the low of that range. And then that process, if it's a balanced day, is going to reverse. We'll break that low, trap back in, and come right back to the middle. So that's how you trade that. That's how we got prepared for the day. I'm not going to cover oil tonight, although oil was a very interesting chart today. And I will do Bitcoin later tonight. But Bitcoin, much the same, just to give you a quick preview. I will start covering Bitcoin on a daily basis, getting ready for the launch. When you look at Bitcoin here, I have it on my other chart. You'll see I was trying to break it down into London sessions and US sessions. But again, same story. You want to bring in Bitcoin more and more of a professional approach as more and more institutions will start trading the futures as they come online, right? So this is the Bitcoin chart. You can see I've already come up and started working on support resistance areas today. This, and you can see this was, hold on one second here. This was today's chart, and you can see I posted this last night, just so you know, before we ever got into this. And you can see we pushed right into my first support level from yesterday, turned around, pushed right back up. And let me collapse this chart real quick so everyone can see this. There we go. Okay, so this is my value area from the prior day, right? A couple things about Bitcoin. Here, let me copy this chart so I don't lose all my work. Again, this is just kind of a starting point for Bitcoin in terms of doing my assessment. Let me clear all the lines. Okay, so on Bitcoin, right? If you'll look when it goes down, it's the same rule as every other market out there, right? You get markets have rules, right? And so does this. So I want to show you what it looks like when it reverses, right? You'll notice on down days, you've got to be able, if you're looking and going, oh, Bitcoin's going to go down. Well, the first thing that it has to accomplish in order to get down, the blue areas are the value areas for the day, the dark blue areas that you see here. Oh, you can't see these here. Let me do this. These areas right here, these blue areas, these are value areas. I'm sorry, they don't show up very well. I will change the color so they show up better. But this dark area is the value area. The principle behind that value area is I generally expect, right, as a general principle, when I'm looking for reversals or the market to reverse, is that as we come down, these are my friends in these neighborhoods, these blue areas on the chart. These are my friends. When we are above that area, I expect this area to provide support for me. I'll give you a perfect example. If you look back to November 1st, right, and I come in and you have someone come and say, I'm massively bearish, right? I'm massively bearish on Bitcoin, right? And I go, hey, that's great, buddy. I'm glad you're massively bearish. Here's the bottom of value for the prior day. In order to get a bearish move, the first thing you're going to have to think about is the ability to get below 60.84. If you don't get below 60.84, you will not have a bearish move. You're going to have to get through all these buyers. Why? What's happened? This is where 70%, again, no one can see what I'm doing. No one can get above 70%. No one can get above 70% of where the prior day's value went through. And if you look, the following day, we open up and we tag it. Really, this looks like it's mostly into the Asian session. Value area high. We finally get above the opening print for the session, which for me, I have the opening print as early Asia, close of U.S. markets and into early Asia. We get above, and you'll notice that that A period acted as support, and we trended up all day long. Same situation again. As I'm moving along, right, even if I want to be uber bearish on Bitcoin, I know if I don't get below these 2 points, if I have nothing else to figure out as I'm going through the day, I know that I've got to get below this value area to make any progress to the downside. And again, you can keep working this process over and over again, and you'll see on this day, right, as I open up, even if I open up within prior days, this is really becoming a pain. There we go. Even if I open up within prior day's value, I know not to buy the short juice until I've gotten outside of prior day's value and I'm starting to come down and get underneath. Why? Because these guys are buyers in this area, right? How do I know they're buyers? They prevailed. It closed at the top of the range. If the sellers had won this battle, we would have closed underneath value and pushed down. We didn't do that anywhere. I'm going to show you what it looks like when it does finally turn. So if you look on this day, see how value shifted from this point up to this point, right? So this is just basic 101. This is the most basic part of the process that goes into thinking through whether I want to be long or short. Well, the first thing I'm going to look at is I'm going to go, okay, here's my value area on this day. I closed, this is essentially the end of the day, NYSE, right about 5 o'clock. I closed right here on the day. I now have in this area, I have a world of people who are trapped, right? Just like I was showing you earlier with NQNES, I have a world of traders that are trapped. And I now know, okay, if I get up into this area and reject, I now have an opportunity to push to the downside. So lesson 101 for trading Bitcoin. If you're bearish or if you are looking to the short side or you're looking to the downside, the first thing you want to know is, do I have prior days, right? Do I have prior days value sitting above or prior days value sitting below me? Once I get below prior days value, you notice I now have room to extend below. And if you look how this day worked out, oops, didn't mean to do that. Let's reverse that. Here we go. Single letters. There we go. If you look how this day worked out, right? What did we do? We opened up, failed to get back into the value area, rotated all the way down to support. This is obviously in early Asia. We came back up. This is obviously during the European session. Attempted to get back into the range, closed out once we tried to trap back in, closed back out of range. We trapped sellers up here. We went 4 wide. We were unable to get back to the prior day's point of control. And then we get a long liquidation down to the lows. And then you'll notice the following day, right? Single area. Notice that this blue area now acts as resistance, right? For the course of the day, we push up into that blue area. So that's 101 of just having a basic Bitcoin introduction. That's where the support resistance is. I'm looking forward to trading Bitcoin futures once I can figure out what the actual risk is in them. I want to mitigate my risk to start with, and then slowly advance my trading after I figure out what the parameters and what the rotation size is going to be, and what the ability for smaller traders to short, what that'll do to the trading context of this market. But that's 101. If you don't have a trading plan, my encouragement to you is to get a trading plan. There's lots of good guys to follow. If you'd like to visit us in the room during the day when we're doing the real-time analysis, send me an email to tradeandperform@gmail.com. Be happy to give you a 5-day pass into the room. And you're welcome to join us every morning for the live market preview that I do at 8 a.m. Central Time. Other than that, I look forward to seeing everyone in the morning. This went on much longer than I thought, but I thought there was a lot of good information in there. And we'll see. We're trading down right now. Let's see where we open up tomorrow and whether we're above value or below value. And that is where we'll start our analysis in the morning and find if we can't get some trades set up for us. I'm primarily bullish and looking to get long in ES and NQ off of large rotations to the downside after I can identify that there have been trapped sellers. We got a little bit exuberant late and push them back up to the mid and if possible to the other end of the range. That's my essential DNA of trading for NQ and ES, and we are essentially paper trading Bitcoin until the launch of the futures on December 11th. So anyways, have a great night, guys. Make money. Don't lose money. Past performance is not indicative of future results. I totally forgot. Past performance is not indicative of future results. And make sure you're following your trade plan. This is for educational purposes only. Have a good night.